All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, September 18th, 2023. I've got a couple things to go over today, and boy, I'm sure you like the first thing that we have coming up, but we're going to start off a little bit differently. I still will keep that in there. All right. Today, the NAHB Housing Market Index came in at what versus an estimate was supposed to be 49. Anyone know what the NAHB housing came in at today? Actually, it's supposed to be at 50, not 49, but anyone know? Going once, going twice. Sold. Came in at 45. So our housing is showing contraction. Not that that's been a surprise for us, but if you guys were to describe our housing market right now, how would you define our housing market? How do you define our housing market? Good answer. People aren't selling. So my next question then, Dave, why? Why are people not selling? Renee said insane. Renee, what do you mean by insane? There we go. Jim and Dave, you kind of said the same thing. And I'm going to type it both in. Demand not being met for new homes because people don't want to pay a 6% plus interest rate. They just they don't want to. I don't want to say they're being cheap, right? Because that's not necessarily the key, but they don't want to pay that higher interest rate. We've been used to having rates so low that people aren't interested in moving right now. Not to mention, there is still a shortage on homes and I want to say 6.5 month selling cycle unless the buyer is paying cash, and that is currently at an all-time high. People paying cash for homes right now is at an all-time high. It's kind of neat. It's almost like we're saying we don't trust the banks anymore. We don't want to use the banks anymore. A lot of us are able to sell our house for maybe a pretty good profit. So we're not buying houses. This in turn means people are not willing to move to new jobs. A lot of people are not willing to move to new jobs, which is different because we had I think it's the millennials that were willing to move anywhere for jobs and living in vans. And we don't hear very much of that anymore. But the question is, how do I say this? What part of the markets benefit from people staying in their homes, and what part of the markets do not benefit from this? What do you think? What part of the markets benefit from people staying in their homes? Love it. Lowe's, Home Depot. I'm just going to say home repair, right? Any other part of the market? It's rather interesting. Vacations and Airbnb. I guess when you own a home and own it for a while, you look to get out of it. You look to go on vacation away from it. And if people are looking on vacation, there you go. Travel, vacation, travel, Airbnb. That should be rentals. Who just typed that in there? Renee, thank you. Rentals and travel. Those are what supposedly people are looking at spending their money since they're not going into new jobs. I found that pretty interesting. That was something that I wasn't quite expecting. So with that said, I made the next comment. Geez, people are getting crazy and dumber all the time. And I'm going to go with the UAW strike, where they need 40% increase salary, 4-day work weeks, more benefits, and what was the fourth one? Salary, 4-day work weeks, more benefits. There's something I'm forgetting. I have it down here. I should know. For crying out loud. Placement workers. Is it the strike fund? That's it. Strike fund payments. So, over 4 years, Russ, 10% salary increase over 4 years. So here we are having people saying, you know what? I deserve a 40% salary increase over the next 4 years. I only want to work 4-day work weeks, so I'll do 4/10s. I want more benefits. And of course, the union expects more fund payments to be made to their strike fund. If you were owner of a company, what would you say? If you were the owner of a company, if you were Ford, what would you say? China, thanks. UAW. Can't do it. Can I fire all of you and hire new people? I try to eliminate the union, but want in one hand, and so I spit in the other. Want one hand, so I spit in the other, see which one gets filled fastest. Yeah, I mean, it's just, I'm just going to make the comment. This is not capitalism at its best. And I'm just going to go so far as to say, if you didn't know yet, California passed the Fast Food Act for all fast food workers to get a $20 per hour minimum wage. So I just sit back and think, right? Boy, if I was the big car companies, sayonara. Man, I'm shipping. Ford's going back down to Mexico. GM's going out of business as well as Chevrolet. The Lincoln brand, it's those four, they're already going out of business. It's unbelievable. And I'm not saying that working in a factory is a bad job, but I am going to consider it unskilled labor, meaning that the skills needed are that you show up to work and within 2 days you're trained on how to do the job. When I saw California pass the Fast Food Act for a $20 minimum wage, I just kind of went back and thought, boy, you politicians are idiots. Minimum wage was set up to bring unskilled labor, teenagers, into the market so that they could start to learn a trade and get paid something that was a minimum wage. We were not supposed to be a way to provide for a family. It was a starting job. It was a beginning job into something that requires some skill. I did kind of giggle just a little bit because McDonald's says, it's going to push 250 grand onto every franchise. We're going to start selling Big Mac meals, so Big Mac hamburger, fries, and a drink for $23.99 in California. In-N-Out Burger started out in Southern California. It's a good burger if you just got out of the ocean. There's nothing fancy. It's just a burger, cheese, lettuce, tomato, some Thousand Island dressing on it. They said, hey, we're looking to move out of California. An iconic fast food, In-N-Out Burger joint is looking to be gone. All the small fast food restaurants, and I'm going to talk about in Santa Ana, you have Little Saigon and Little Vietnam, where if you really wanted some authentic Vietnamese and Saigon, is that, well, that's all Vietnam, right? Little Saigon, Little Vietnam. If you wanted that type of food that's authentic, it's there. And I'm just thinking all those little restaurants that are just going to go out of business. My favorite was Yong's Donuts. Brother Yong's. I grew up with this guy, him and Mel's Diner. Mel and Brother Yong. I would surf in the morning and go eat a late breakfast with these guys. They saw me get married. They saw me bring my kids to their little diners. There's no way these small businesses can afford that. welcome to California, finding a way to take business out of their state. And I'm just shocked that they're expecting other states to do the same. With that said, someone asked me recently, they said, hey, can you go over pivot points? Again, you talk about pivot points, and I pulled this from Investopedia, and I 100% disagree with what they're saying here. Pivot points are used by traders in equity and commodity exchanges. They're calculated based on the high and low and closing prices of previous trading sessions, about 15. And they're used to predict support resistance levels in the current or upcoming session. These support resistance levels can be used by traders to determine entry and exit points, both for stop losses and profit taking. I'm going to be the first one to tell you pivot points are not support and resistance levels. And if I was to bring in our charts for the market, you can see how often they fall through. They just aren't accurate. Broke above it, broke below it. It did hold it here and here. It was a resistance level, broke it, support it, broke it, came up to it, broke it, broke it, broke it, broke it. They're just not very accurate. It's a short-term indicator, much like day trading. Well, then why do we use it? We use it because it has that herd mentality predictions. For a while, we knew that, hey, right here at that 3,500 level, there was some amount of buying orders that were used until they were exasperated and it fell through that support level. Hey, there was some amount of buying orders, again at a round number, 3,400. And it took off up to 3,500 and it bounced off of it again. It's just a short term, right 50% of the time indicator. It is a day trading indicator to a certain degree. It is not an indicator that I say you should use. It is not an indicator that predicts the future accurately. It is just a short-term indicator that gives you a general idea, 50-50, on a good point to enter a trade. For myself, the bigger money uses the blue and the red line, the 50-day and the 200-day. I kind of giggle because occasionally on TV or in education, you'll hear someone talk about an 80-day or the 100-day simple moving average. Nobody trades off of those. The first time you hear someone talk about an 80-day or a 100-day simple moving average, that's your first red flag that they're not trading any real money and that they're just listening to some joker on the TV. Those are not accurate. There's no fund. There's no hedge fund. There's no institutional trader that uses an 80 or 100-day simple moving average as a buy or sell indicator for their funds. It doesn't happen. It's the 50-day and it's the 200-day. They're slower. They're easier to read. It gives you an idea of where big money's going that can actually move markets in the near term future or the near term trading days. All right. I have the big picture from briefing here. What it all means. The short answer is, with the market running like it did in the first half of the year, thanks to the vast outperformance of mega cap stocks, 7 of them, right? 7 stocks gave us over 80% of our gains at the beginning of the year. The pull higher from here won't be easy. That's because expectations are higher now. Earnings multiples for the leadership stocks are more stretched. Interest rates are higher, and they're probably going higher on Wednesday. and there is some concern that the economy will be weakening because of the prior rate hikes, which raises the level of uncertainty about earning prospects. This is why the stock market's digestive process can have a sense of agitation about that it created a choppy trading environment. The future is inherently uncertain, but there's an elevated sense of uncertainty today about all things that matter for the stock market: interest rates, monetary and fiscal policy, earnings, inflation, the economy, and the performance of mega cap stocks. And that is apt to get in the way of conviction on the part of buyers and sellers for the time being. So, short answer, the market is uncertain. We had 2 down weeks. We have a bearish week, a bearish market right now. We are just barely looking to go higher, but my expectation is we'll have our rate hike, and they will not say that they are all done, and we will probably drop back down to that red line at 33,809 on the Dow Jones Industrial Average. The S&P is actually went from bullish to bearish last week. That just means it's going down. My expectation is we will probably go down and touch the 4,250 line on the S&P 500. Now, if you paid attention for our trade findings adjustments on Thursday, if you put the bear put on the SPY at the open today, you could have closed it for a 10% gain. So Thursday, Friday got you roughly a 10% gain with a 1.2% drop in our market on Friday, and the higher increase in volatility on Friday. It could have been a one-day trade that had a 10% return. Now, if you annualize that, that's like a 3,600% annualized return that Hurley Investments gave you guys on Thursday. Of course, that's garbage. And the reality was it was just a 10% return in one day. But for the record, for all those educations out there, yes, last week we gave you guys a one-day trade with a 3,600% annualized return. And you can take that to the bank, right? I never say annualized returns. It's always what you really made. And here we go. The NASDAQ is also just turning bearish after a one down week and a flat week. It also can't hold the 50-day simple moving average. All right, so here we go. Still think the market will be down 1.5%, maybe more. I probably would expect the market average of like a 2.4% for September to be more accurate. Earnings this week, not very many. AutoZone, General Mills, FedEx, and KB Homes on Wednesday. FedEx is not expected to report good numbers. With the increase in the price of fuel, FedEx is expected to miss quite a bit. Could be down another 10%. Darden Restaurants on Thursday. Economic reports. NAB housing market came in today. It was 45 versus an estimated 50. It is in contraction. Building permits and housing starts are also expected to be down. Wednesday, the FOMC rate decision out here Eastern Standard Time. Well, in Eastern Standard Time, it's at 2 o'clock, and 2:15, you normally get a question or two, a question answer session from the Fed. The expectation, they did not raise rates last time. The expectation is they'll raise rates now, and they will raise rates in December and then take a break. They might raise rates now and in October because inflation and the price of fuel keeps going up. Nothing to do with the fact that the supply and demand from the Saudis and from the Middle East or OPEC is being crunched so they can gain more money. kind of disappointed that Biden gave a half-hearted, hey, don't do that. No ultimatum, just very slightly said, hey, don't raise our rates. We even have Saudi Arabia, that's supposed to be one of our allies, currently lowering their output of petroleum or gas so that they can also push that rate probably back up to 110 to maybe 120. Broke 90 for the first time last week, and it's definitely on its way higher. For how we're looking to trade, we added protection last Thursday and Friday. We are expecting a rate hike in a falling market. I found some interesting articles. This one was actually last week. Everything you need to know about UA's target plans and possible lockouts. And then right underneath it, what did I do with it? Oh. Well, I thought I had one on what was really happening. So pretty interesting. I might, between now and when I post this, I'm going to find the one that I had that says, hey, here's what's happened so far, and here's what's looking that's going to happen moving forward. Emerging markets have a China problem. This strategist favors India, which just hit a record. Really interesting on emerging markets and where India is looking to take over some of what China has been doing in the past. I also found a pretty interesting chart on Japan, US, and European constitutes, just how you'll see their businesses working accordingly. Here it is. Striking unions impact the economy at a level not seen in decades. Here's what's already happened in the 4 days that we've been in this strike. Very interesting. And again, I'm just going to tell you it doesn't end well. And if you believe that the strike will affect not only the 3 big companies, but suppliers, hourly pay, the cost of cars, transportation in general. I actually have a handout, and the handout is the theory of tax cuts for the rich. This is the trickle-down economics that was actually researched by Thomas Sowell. You guys have a copy of this. If you look on your handouts, you guys have a copy of this so you can make the judgment call for yourself. Do you think that the strike and doing 3 or 4 weeks on strike, will that affect the economy? Will that affect you? Will it affect the price of cars you want to buy in the future? Does it affect all the suppliers that work with cars? The steel on a commodity level? This is a very interesting article that I have attached as a PDF that if you guys go to your handouts, you can download this yourself. This is a very, very, very interesting read, going back in history and basically pinning trickle-down economics on the Democrats back in the day for not wanting to raise taxes. Interesting. It's interesting how times have changed and how parties have changed. But again, please go to the handout section in your GoToWebinar, and you can download that PDF. All right, what's next? McDonald's franchises says in New California, fast food bill could cause devastating financial blow. Here's an example of trickle-down economics right here. Do enjoy this read. But yeah, fact of the matter is, there's no way in hell I'm going to pay $23.99 for a Big Mac meal when I'm in California. Fact is, I get stopped on the border, I might be bringing more food in just to eat. I had to enjoy this. I put in articles here about climate change, that yes, climate change is happening. Here's the other side of the argument. 1,600 real scientists, including several Nobel Prize winners, too, sent a letter to the world saying the whole climate crisis is a hoax. So now I'm going to throw the other side of climate change to you, where they believe it's a hoax. And I'm letting you see that other side of climate change. With all that said, what questions do you guys have for me that I can answer for you? And yes, we had protection on Thursday and Friday. Some protection was out of the money, trying to be a little cheap, seeing if we can't get through this rate hike relatively easily. But questions for me. Kevin, all the fast foods will just, what was that? Kevin, all the fast foods will just get automated self-service. Yes, well, maybe, which is kind of frustrating because out here we have a fast food called Cafe Rio, where you kind of make your salad or you make your burrito and you say what you want on it. There's always a mistake. And it's funny because more often than not, we get our food. It's not what we wanted. It's not what we put in. We take it back and say, hey, you guys are idiots. It didn't have this option. We put the original option. Your cooks don't know what the original is. When we ordered 6 of their salads, we did 3 they had to remake. And they were kind of buttheads about it. And we're like, hey, we came to you after we placed our order. You didn't want to spend the time to make sure that we put it in right. You have waste. You're losing money because you wouldn't take the time with us. I don't know. You need fast food people to still serve it out there. You need it to cook it. It might get automated, but the fact of the matter is, I think more and more people will not be eating fast food, and you'll see more people bringing their lunches, or maybe just doing more restaurants, right? Mary, when did you put protection on? Well, so it's interesting. We put some protection on Thursday night on Baidu and Boeing, and Under Armour already had protection on. We put some protection on Friday on Apple and Meta, and Disney had protection on, and it keeps going higher. We're just preparing for Wednesday. We'll see how the market reacts to another rate hike and the fact that the Fed will probably have one more towards the end of the year. So, Mary, we were just a little preemptive in getting some stuff on. We probably should have done most of it on Thursday, but we had to wait till our big Friday drop where the market was down about 0.5% is when protection started going on. And yes, I'm glad you closed out your trade. Anytime you can take a quick 10% in one day, you take it. And Mary, you just have an annualized return of 3,600% return on your portfolio, even though you only made 10%, which was like what, 45 bucks, 45 bucks on $445. Yes, Keeve is going to keep doing the trade findings and adjustments, and it's going to do it's going to be more streamlined. He's going to do the trade findings and adjustments, a quick 15-20 minutes, boom, here you go, and off you go. So yes, we are going to try to streamline that down. What do you see with the auto strike? Mod, I think it's going to go 4 to 8 weeks. I don't think it's going to be something that's going to get solved. I think the gap is too wide. I like that Ford already has hourly workers. Ford has been moving away from union workers, but the idea that we're going to do electric and all electric, even with a grid that can't support it, with the push from the politicians that we need to be all electric, the more electric we do, the less jobs there are for the traditional automobile manufacturer. So, to be honest with you, I think this could be a huge hit to UAW, the Union Auto Workers, and with the push for electric, there's just not going to be that same need for the auto workers as there are for combustible automobiles. So I don't know if this is their last ditch effort, but I think the union is screwed. And I think the United States is in deep trouble if we keep trying to push electric vehicles that are so expensive and at the same time that our grid's not able to handle it. My brother's learning just how expensive an electric car is out in California, and it's somewhat hilarious. I think electric is nuts for now. Hybrid, I agree. Hybrid is really good. There is a Hyundai that does like 860 miles to the 12-gallon fill up, whereas the wheels rotate, they charge the batteries, and it really doesn't use electricity until you go above 55 miles an hour. A really good car for around town, a hybrid, and it's the Hyundai hybrid. Any other questions? So the interesting part, Maud just asked, why don't the auto guys know this? Well, remember, with Obama, there was a big push to go electric. And there were some unrealistic numbers or restrictions put out for both the exhaust and how to make that cleaner, and for the number of automobiles that are out there. So the automobile makers were trying to fit into what originally was thrown out by Obama, and their biggest problem is they're trying to use their current cars and make them electric. Well, Tesla proved that doesn't work. You need to create a new electric car, which, again, in my opinion, is not as safe. There's no engine in the front. There's batteries in the back that have explosive tendencies. Really, an electric car is clearly unsafe compared to a Ford F-250, a Ford F-150, a Suburban. So let's just call it stupidity. I told you, geez, people are stupid. The world's getting crazy. Automakers have not understood they can't take their existing cars and make them electric. It doesn't work. Ford flopped big time. Oh, it can charge a house for 2 days, but if you put 3,000 pounds of weight in a trailer, your truck only goes 68 miles. Pathetic. My brother, I love the kid. I got the newest Tesla, 90 grand. I can go 400 miles. And I just was like, BS. He couldn't come pick me up from the airport and made us late to a Raiders game in the SoFi Charger Stadium. On a full charge, he got stuck in traffic, was running the air conditioner. He was late because he ran out of charge sitting on the freeway, I'm sure for a couple hours. Full AC, probably had a movie going on. Let's face it. Cost him dearly. His two older brothers chewed him out something fierce. Toyota does more hybrid and has stayed away from the pure electric and doing well. Agreed. I mean, really, Toyota and Hyundai are the ones that seem to be doing hybrids pretty darn good. Any other questions you guys have? If not, Craig, welcome to the group. I hope you found this helpful. We try to go over some type of learning each time and try to give out information on what to expect in the upcoming week in the market. All right, any other questions you guys have? All right, guys, if not, hey, glad to have you here. We'll see you Thursday with Key for trade findings and adjustments. Again, way to pick a good one, Keeve. You could have closed this morning or Friday afternoon. That SPY put for roughly a 10% return. And pretty good to have that happen. All right, guys. Hey, I'll see you next Monday. Appreciate you being here. Look forward to seeing you in the near future. Good night, everyone. Bye-bye.